What's up traders? John Howell here, officialjohnhowell.com of course, and in this video I'm going to help you and share with you a charting technique, analysis on the actual chart itself to help you find good areas to enter to make sure to, yeah, let's get into it.
Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader.
Alright, so this is the introduction. Let's get straight into it. I'm going to help you with a charting analysis, understanding of the way the markets work to help you identify good areas to enter and also, yeah, good areas to enter when trading. Now let me ask you a question. If you're trading the markets, what would you prefer? Would you prefer to have momentum on your side or against your side? Well, of course the answer is on your side, right? We always want momentum to be on our side, makes sense? So, if we're looking at the charts here, and you guys see that? Can you see that? You can? Woo, yeah, you can. Alright, cool. So, we're looking on the whiteboard, should I say here. Here's what I do say. By understanding how the markets work, we can see that the market moves in peaks and troughs. You know? Peaks and valleys, peaks and valleys, peaks and valleys. That's when it's going up, that's when it's going down, and obviously when it's going sideways, it's doing this type of thing. You know, you're not really getting either way. Make sense? So, just checking you guys can see that. So, in an uptrend, what do we have? We have higher peaks and higher troughs. Make sense? So, man, I need to get new whiteboard markers, don't I? So, higher peaks, higher troughs, higher peaks than uptrend. Okay? So, obviously going uptrend, and then obviously we have lower peaks and also lower troughs on a downtrend. Now, what do we have in a sideways trend? Well, we have a higher peak, we have a lower trough, we have a lower peak, we have a higher trough, we have a higher peak, a lower trough, a lower peak, a higher trough, and so on and so forth. That's obviously a market that's going sideways. Don't ever get involved with this. I don't care if you're trading a 1 minute chart, a 10-minute chart, a forex chart, a stock chart, a futures chart, it doesn't matter. A daily chart, an hourly chart, a weekly chart, a monthly chart. When the market's doing that, don't get involved with it. Okay? Do not get involved with it. Now you might want to be on, if you're very happy trading more sort of riskier trades, then yeah. But if you want to know the secret to getting a higher probability, well, this is one of the secrets here to getting a high probability, or how I've been able to get over 90% success rate trading the markets. Hear me out here, okay? So we have higher peaks, lower peaks, sideways markets. If we know that, where's the momentum if it's making higher peaks and higher troughs? Up. Where's the momentum if it's making lower peaks and lower troughs? Down. Makes sense? So, here's the thing, guys, is that if that's the case, then doesn't it make sense that if it makes a higher peak and a higher trough that's showing upward movement, then we want to enter here and we want to enter here? Make sense? We don't want to enter here because we don't know that's going to make a higher trough yet. We want to make it short turn around. Enter here. Long. Because you've got the momentum on your side. Now, it doesn't mean it's going to continue, but knowing how the markets work, you know that's what may happen moving forward. Moving to the downside. Where's the momentum? It's making lower peaks, lower troughs. Where's the momentum? The momentum's obviously down, right? And as you know, right, if you see a chart, how the charts really look is I draw this over here. If it's in an uptrend, right, you have these strong. You know what? And that doesn't even work now. Nah, got to get new black marker. All right, black marker. You're rest in peace, my friend. If we have an uptrend, alright, if we have an uptrend through there, we generally get this strong buys, and then we get this sort of action, right? Like this. And then we get like a nice up move in there. Boom, 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 boom. Alright? What's that? That's a, can you guys see that? Yes, you can. That's an uptrend, right? So, the thing is, guys, is that when you get an uptrend, a nice strong buyers, weak sellers, strong buyers, weak sellers, when you get this type of action, this is here where you want to be entering, right here. Alright, X marks the spot, right there. That's there where you want to be entering there. As the market starts to pick up and making this higher trough and higher peak. Makes sense? So that's in the uptrend. This is where we want to be entering. This is where you want to look at. Doesn't matter if you're trading a minute chart, an hourly chart, a 4-hourly chart, a daily chart, a weekly chart, a monthly chart, a forex chart, a stock chart, an options chart. It doesn't matter, right? Because the market makes peaks and troughs. Makes sense? So this is what we want to be looking for here, right? And then you might have a stop down here or a stop just below the bar, right? So you stop somewhere down here, and then away you go. Makes sense? So, and obviously you want to have the type of entry bar. You want to have the volume, add a bit of indicators there as well too. All these other layers to make it high probability. But that's the basis, guys, of what you're looking for. And as you can see, right, the momentum's there, right? Because we've got these strong buyers. The buyers are saying, right, we're in control. And the sellers are trying to do something, they're very weak, and boom, the flies go. And this is what we call it, like a flag formation or a pullback, whipsaw, whatever you're going to call it. Make sense? The same for the downside, right? Same for the downside. If you've got this weak, if you've got this lower peaks and lower troughs, if the market's going down, if the momentum is on the downside, we generally get a strong move down, and then we get this type of move up, like this. Makes sense? So we have these strong sellers now, and then now we have these weaker buyers. Right? Look at the strength in moves. Strong buyers, weak sellers. Generally speaking, once it breaks out with good volume, it equals more strong buyers. Strong sellers, weaker buyers equals stronger sellers. And as you know, you see that, right? See time and time and time again. It's known as a flag and so on and so forth. But it's not just a flag, right? If you get those strong sellers and those weak buyers, and you get a nice little breakout through here, you've got your volume indicators, all that sort of stuff going, then you should expect that to happen. Obviously not all the time it's going to happen. That's the reason why you have a stop just above the entry bar, or at least above the peak. This is where, from here to here, this is where your stop would be if you're trading anything. And that's exactly what happened there, right? So what you're doing there, guys, is you're trading with the momentum, right? And what is the momentum? The momentum is the peaks and troughs in line with the strength in moves. Strong buyers, this is the strength. You're reading the strength in moves. So now you're getting a bit more closer look at what the actual chart's saying to you. Make sense? So if you're looking at this, strong buyers, it's not just a weak buyer, right? If a weak buyer is like this. Now let me take this off the chart here. I'll whiteboard it for a minute. Alright? So the weak buyers is this. See that? See how the market's just slowly crawling up? That's a weak buying mode. Even when the market's doing that, step back aside, don't really get involved with that. But the market starts to do, but you see the difference between that, right, and this. You know, literally, as you can see, right, this here could have been 3 months worth of action, and that was 1 week. Can you see the differences? Boom! Right? So don't get involved with this, because it's not this here is not giving you a good gauge of a good entry point. But when the market does this, an hourly chart, weekly chart, stock charts, forex chart, doesn't matter, same thing. When the market starts to do this, and we start to get these weaker sellers, we get a nice little breakout bar. That could be a nice little entry bar. But, as I said before, guys, you definitely need to have your other entry, your other rules around there to getting in. Make sure you stop management, make sure you risk of money management, everything you've seen on this video. You need to be trading with momentum. Make sense, guys? So that's trading with momentum, and that's trading with the buyers, as I said before. And if it's weak sellers, you know, you get this type of action through here. Right? So the sellers are going down, but they're not strong sellers. See here, see the differences between that. It's like bam, 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 strong sellers, right? Then we get this weaker buyer action, and then boom, we generally start to head back to the downside. I hope you guys can see that. Cool. Alright guys, I hope you've enjoyed this. This is to help you when trying to identify strong areas, or trying to find areas trying to find a setup, trying to find good setups for good entry points, okay? Trying to find good entry areas, good entry points, trying to find, or how do you find good areas to enter, okay? Plus also, guys, this is a bit of a charting technique analysis. Learning how to read this is also going to help you when reading the charts as well. Remember, success can be yours if you go claim it, so step up, take massive action, and face your fears today.